Hello everyone and welcome to the Money Matters. Let's have a look what is moving the markets today. It's been a tumultuous week, with a series of major corporate announcements that have created more confusion than clarity. Let's dive in and see what's been going on. Shares in Walt Disney rose 6% ahead of Thursday's opening after the company announced a sweeping restructuring and the reduction of 7,000 jobs. This move, which is aimed at saving $5.5 billion and making the streaming business more profitable, raises questions about the reliability of January's strong U.S. employment report, as many tech and digital companies are downsizing their staff this year. In a stark contrast, Alphabet lost 9% of its market value after its new chatbot shared inaccurate information in a promotional video. This blunder has fueled worries that the Google parent is losing ground to rival Microsoft in the growing field of artificial intelligence. The mood in Europe was dominated by fears over Swiss bank Credit Suisse, whose shares dropped 5% after reporting its worst annual loss since the 2008 financial crisis and warning of further losses this year. Despite the bank's efforts to create a standalone investment bank, the mood didn't improve. In terms of inflation, consumer goods firm Unilever announced plans to continue raising prices, although at a slower pace in the second half of 2023. Meanwhile, consumer price inflation in Germany fell more than expected, and Sweden's central bank raised its key interest rate and predicted more hikes to come. The Federal Reserve also indicated that more interest rate hikes are on the horizon, while the New York Fed chief set a funds rate between 5.00% and 5.25% seemed reasonable. Overall, U.S. stock futures were higher, with a decline in Treasury yields and the dollar. European shares reached a new 9-month high, driven by strong earnings from Siemens and AstraZeneca. However, the shares of troubled Indian conglomerate Adani faced more challenges, with MSCI designating some of its securities as non-free float, and Norway's sovereign wealth fund divesting all of its remaining shares in the company. And that's it for today's update. Thank you for tuning in, and we'll be back tomorrow with the latest news and developments in the stock market and the economy.